One of the best ways to understand where your money goes each month and what changes you could make to help you reach your financial goals is to make a budget and stick to it. The ultimate goal of budgeting is to avoid spending more than you earn. When creating a budget, follow these steps to ensure that it fits your lifestyle and financial goals. Number 1. Make a monthly budget by calculating your expenses. You'll want to run the numbers for your expenses after you've figured out your income. To get an idea of what you typically spend each month, look at your bank and credit card statements from the previous 3 to 6 months. Then divide your expenses into categories like necessities versus discretionary spending. You are free to make as many or as few categories as you want. You can, for example, group recurring monthly charges together or divide them into categories such as rent, utilities, and insurance. When it comes to discretionary spending, it's probably best to break down your categories more thoroughly. Because dining out and entertainment do not always go hand in hand, you may want to calculate each amount separately. Number 2. Know your income. If your pay doesn't fluctuate much from month to month, this first step is simple. That is your number if you are paid monthly. Multiply your net pay by 2 if you're paid every other week. Depending on your pay schedule, there may be months when your paydays fall on the same day, allowing you to earn an extra check in the same month. However, it's still a good idea to budget for the norm, whether it's 2 or 4 paychecks per month, and then make adjustments when you get an extra one. If you have a tendency for your wages to fluctuate, take the last 3 to 6 months and average your earnings. Instead of focusing on your gross income, concentrate on your take-home pay, which is the amount that actually ends up in your bank account. Number 3. Know your spending. It's one thing to keep track of your income and set goals for how you want to spend your money, but it's another to keep track of your spending. Keeping track of your spending can be difficult, especially if you make multiple purchases per day. Using multiple credit cards, making cash purchases, and discarding receipts can all add to the confusion. To make the process easier, use budgeting software like Mint or You Need a Budget. These programs connect to your bank accounts and can consolidate your earnings and transactions into a single location. You can then categorize each purchase to compare what you've spent to what you've budgeted for the month. You'll be better equipped to adjust your behavior based on what you observe. Tracking your spending can help you test your assumptions and goals, as well as give you an idea of how to adjust them in the coming months, in addition to adding accountability. Number 4. Choose a budgeting plan. Now that you've mastered the fundamentals, it's time to consider whether you want to use a budgeting strategy other than what has already been discussed. We would recommend for you to use the 50-30-20 plan. The 50-20 budget is all about keeping things simple. Instead of creating multiple categories for each type of expense, you allocate 50% of your take-home pay to necessities, such as housing, utilities, and car payments, 30% to discretionary spending, and 20% to your financial priorities, such as savings and debt repayment. Keep in mind, however, that you are not obligated to use the 50-20 template. If you're young or need to spend more time focusing on financial goals, for example, you might allocate 30% of your budget to those areas and 20% to discretionary spending. Number 5. Start investing. Would you like to hear more about investing? We can make a separate video on investing and how everyone can start doing that today. Write down your questions about investing in the comments below. Thank you so much for watching and see you next time.